Welcome to today's episode, where we'll be discussing an important change in UAE payroll and the financial inclusion landscape, universal accounts. For many years, salary cards have been widely used to support salary disbursements for low-income workers. But with the CBUAE universal account mandate, the ecosystem is moving towards basic digital account-based access. This impacts all LFIs that are participants of the UAE wage protection system, whether they are banks, exchange houses, or SVF license holders. And most importantly, this impacts the workers who will now be offered these universal accounts in place of the traditional salary card. I have with me Syed Ali, our CEO, and Hadil Mahdi King, our Chief Strategy Officer, who will help us break this down into simple terms: what universal accounts are, who is impacted, what exchange houses and LFIs need to prepare for, and how the industry can move forward without disrupting payroll operations or customer relationships. Let's start with the big picture. Why has the universal account mandate become such an important development in the UAE's payroll ecosystem?
Thanks, Chantal. At the heart of this mandate is financial inclusion. The UAE has a large population of low-income workers who are employed, they receive salaries, and are economically active. But historically, their access to formal financial system has been restricted by availability of account-based services. What they've typically had are payroll cards, which solve the problem of receiving salaries, but they don't take them all the way to having broad access to the essential financial services that everyone requires. The universal account mandate is intended to change that. What universal account offers is a regulated, secure, digitally accessible account-based solution for the low-income segment that will enable access to a broad range of services and also the right outcomes for the low-income segment, including consumer protection measures, the onboarding experience, complaint management, multilingual support, etc. So the mandate is really intended to uplift the low-income segment into a broader and formal access to the financial services.
So this is not just a compliance change?
Exactly. Compliance is just a trigger, but the impact is much broader. This changes the way in which the relationship of the financial service provider and the user is structured. It gives direct access to account-based services to the low-income segment, which most of them have not had before. And it completely changes the design of how they interact with the solution. They have direct access to essential financial services like remittances, payments, deposits, withdrawals, etc. But also ensuring that financial services are provided to the users in a compliant manner with regulatory oversight, ensure the right amount of right level and standards of reporting, and also oversight. So yes, the compliance and regulatory mandate is the trigger, but the impact is much broader.
So let's simplify this. What is a universal account?
So as Ali touched on, this comes out of the National Financial Inclusion Strategy, and it's designed to enable low-income earners within the UAE to have access to basic accounts. So a universal account is an accessible, digitally accessible dirham account which has no minimum balance requirements and which is digitally accessible for those that earn 5,000 dirhams a month or less. The core design behind this agenda was to ensure that it is essentially a low-cost basic account that includes all of the key features and functionality that everyday people need in their lives. So the key features and functionality as a minimum should require salary or income transfers, should require ATM access, and also the ability to get a card if you want it so that you can do card-based point-of-sale transactions, cash withdrawals, and also domestic and international transfers. So that looks like peer-to-peer transfers domestically, and then cross-border fund transfers or remittances internationally.
So who is eligible for a universal account?
The eligibility is for UAE residents who are working and earning their salaries here. So essentially anyone within the UAE that's earning 5,000 dirhams or less monthly and that does not hold another account with another licensed financial institution. There's obviously been some topical discussion in the market around that, and the reliance is going to be placed on the worker to self-declare whether they have accounts elsewhere or not.
What are the main customer protections or accessibility requirements?
So these accounts have been designed with consumer protection front and center. And so what we're saying is essentially digital is the focus. These are accounts that need to be digital with no minimum balance requirements. Above and beyond that, it's also designed to ensure that it's equitably priced. So what we're expecting is no or minimal maintenance fees, so capped at 2 dirhams per month. In addition, we are expecting, or the notice requires, that it's free balance inquiries, so no fees attached for that. And in addition, the accounts need to be made available in 4 languages as a minimum. And those languages are Arabic, English, Hindi, and Urdu. Partners can decide to include more languages, but those are the 4 basics. And I think the key part here is up to 4 free ATM withdrawals. That is the minimum expectation. And again, partners can go above and beyond that if they'd like to.
So, Ali, what should institutions be careful not to misunderstand?
I think the biggest misunderstanding that institutions may have and that they should avoid is treating the universal accounts as another payroll card product. Universal accounts are intended to be financially exclusive. The biggest shift is moving the relationship from the payroll cards with the employer to universal accounts with the employee or the users themselves. And that is a major differentiation. It is important to understand that the aims of the regulator under their financial inclusion strategy is to empower the end user by giving them direct access and control over their own account so that they can start to develop understanding of digital financial services and start becoming more independent in their use in the right way, in the most cost-effective manner with transparency. The product should be available to them easily in their own language. And also with visibility on the options that they've got available from a pricing perspective, from in terms of the use of those services, all of that. So it's very different from the traditional payroll cards that have existed in the market.
And who's most directly impacted by this mandate?
So the institutions that are directly impacted by this mandate are licensed financial institutions that participate in WPS or salary processing and disbursal. And this includes banks, it includes SVF providers, and also exchange houses. The mandate requires all these institutions to, if they've been issuing payroll cards, to discontinue those cards and start issuing universal accounts to the low-income segment, earning less than 5,000 dirhams a month. The options available to these institutions is to either develop their own universal account products or partner with institutions that are already compliant with universal accounts and are willing to partner with them. As an example, exchange houses who currently have a relationship with corporate employers that employ low-income workers to process their salaries have usually partnered with or directly offered payroll cards to their low-income workers. For such exchange houses, the mandate requires them to either apply to the central bank for an NOC and start offering a universal account or the SVF product themselves, or the other option is for them to partner with a universal account compliant SVF and move away from payroll cards towards universal accounts.
So are exchange houses at risk of losing the customer relationship?
I don't think so. I think there is an opportunity for exchange houses in this new mandate. The exchange houses have traditionally been really important pillars of financial services for the underserved segments in the country, both for low-income workers, but also for small companies, SMEs, MSMEs, and they continue to serve them. In the new model, if a corporate opts for a partnership to enable universal accounts, they will continue to own the corporate relationship and continue to process the salary. In fact, by partnering with a credible regulated partner, they would actually preserve the corporate relationship better than they were able to previously. On the consumer side, they will be also able to offer a compliant product to the market when they're acquiring new corporate business. They will have in universal accounts a much stronger product to offer the corporates. In terms of generating synergies in the partnership with the universal accounts enabled for a broader array of services for the underlying user segment. There could be opportunities for exchange houses and the SVF partners to collaborate and create opportunities that were previously not available to the customers.
How should banks and other LFIs look at this?
But the banks have an important role because for the first time, the mandate requires the banks to look at developing a value proposition for the low income segment. Traditionally, the accounts and the banking services that have been designed and offered by the banks to the market have been difficult to use by the low income segment because they've found them difficult to interact with, understand, and also at times the pricing can be prohibitive. This mandate requires the banks to develop and or offer a service to this segment specifically, which is fit for purpose and for to promote the financial inclusion aims. The banks have the option of either focusing on this particular product, the universal accounts, and developing it and offering it to the market, but they could also look at partnerships that may enable that. We have been pleasantly surprised by the number of approaches and the number of queries we've received from banks to explore potential partnerships in enabling compliance with the universal account mandate for them.
So what does the universal account notice actually entail?
Well, on the face of it, it looks like a product notice where it's essentially stipulating the requirements or the minimum requirements for the universal accounts product. But essentially, this is a much more impactful notice. What we will need to be able to look at is the product requirements, which we are all alive to and are clearly read at the face of the notice. But underneath that, it's showing a shift where we're moving from a product that used to be controlled by the corporates to a consumer product. And so underneath meeting the technical product requirements for which myZoi is compliant by design, there's also the journey of migrating users onto a new product that is aimed and designed specifically for them. So what we will need to do is look at the customer experience journey that underlies all of this and that takes the worker through the process of moving from a salary card onto a digital wallet that has the current account available on it with all of the features that we discussed. But that migration process needs to be seamless, and that boils down to partnerships between licensed financial institutions to allow for that seamless transition within the timeframes that the industry has to comply with. But I think the more fundamental part for me is actually that the consumer, the worker, needs to be alive to what their rights are under this new product construct. And so that also means establishing consumer conversations and knowing their rights in advance of these migrations happening, which would obviously entail things like becoming alive to what the key facts are for the product design, but also how they can apply for the products, what their rights and recourses are in the event that their applications aren't successful. The notice goes into all of these additional requirements that enable the consumer to own their rights independently for the first time. And I think what that means is when you combine technical product requirements with seamless migration plus consumer rights coming to the fore, we really see this as needing proper established partnerships between the institutions to ultimately allow for a financially inclusive outcome at the end of the journey.
So Ali, where does myZoi fit into this?
Well, myZoi is in the unique position of being inherently universal account compliant. myZoi was built to serve the low income segment. We obtained the licenses from the central bank, stored value facilities, and retail payment services to develop solutions for this low income segment so that they could be digitally onboarded, enjoy a user experience which was designed for them, be able to receive their salaries seamlessly, make remittances, payments, and have access to formal financial services in a secure and compliant manner. So myZoi is positioned very well to play a really important role in the ecosystem to help drive the purpose of universal accounts and financial inclusion itself, but also in partnership with other licensed financial institutions who may choose to look at compliant partners to come along the journey with them and therefore drive the right outcomes for this low income segment together in a synergistic way. If exchange houses and other LFIs choose to partner with an SVF licensee like myZoi, they could actually enable compliance with the universal account mandate in a seamless manner, avoiding any disruption in their corporate clients' operations through a seamless migration, which can be achieved in partnership for the transition from payroll cards to universal accounts.
So, Hidea, what should LFIs be looking for in a partner when they're looking to be compliant with the universal account notice?
I think we need to collectively, as an industry, be alive to the fact that none of us will be compliant unless we're meeting all of the technical requirements within the notice itself, which means that we need to be alive to all of the details around the product construct, everything from no minimum balance to where maintenance fees need to be nominal or free ATM transactions. There are multiple requirements, including the language requirements, that are really important from a regulatory perspective. And so if you're entering into an agreement with a partner, unless the partner is meeting all of the requirements, then your partnership would not be deemed compliant. And I think that's the key risk that we need to be alive to and that the partners need to be alive to. It's also where we derive our source of comfort as myZoi. Having an inherently compliant product gives us the opportunity to put our partners' minds at ease.
This has been a very useful conversation. So to summarize, universal accounts are a major step towards expanding financial inclusion in the UAE. They are designed to provide eligible low-income individuals with affordable, secure, and digital access to essential financial services. For WPS participating banks, SVFs, and exchange houses, the mandate is also a practical call to action. Salary card-based models are being replaced by account-based access. That means institutions need to review their licensing, partnerships, technology, onboarding, reporting, and consumer communication. The opportunity is clear. Institutions that move early can stay compliant, protect customer relationships, and build a stronger role in the future of payroll and financial inclusion. Thank you to our myZoi leadership for joining the discussion. For exchange houses, LFIs, and bank partners looking to understand how to transition to universal accounts, myZoi can support you with maintaining business continuity while staying compliant. Thank you.